And the GTHA's housing market took a polar plunge for the month of February, an almost 47% drop for home sales from the same time period last year. So Jason Marker, the chief market analyst from TRUB, Toronto Regional Real Estate Board, is back. Thanks for sticking around, Jason. Appreciate this.
No problem.
So let's talk about what happened in February of this year compared to February of last year, because the numbers are quite staggering. What did you find?
Yeah, I mean, if you're doing the year-over-year comparison, we're certainly looking at a sort of peak to valley, because actually February of 2022 was the last full month before we started to see the Bank of Canada interest rate hikes, and now obviously we're a year into that. And what's interesting though is if you look at, say from the end of the summer to where we are now, we've actually seen a bottoming out in terms of sales, and last month we saw sales up a little bit in comparison to January, and that's sort of in line with our forecast. I mean, we're expecting things to be somewhat flat, starting to trend upwards in the first half of the year, and then even picking up more so in the second half as people have come to terms with the impact of higher borrowing costs. Maybe they've decided to purchase a different type of home or in a different area, and you're going to see more and more people moving back into the marketplace.
It's interesting because it's difficult, though, to trend up if you don't have enough supply or houses on the market, and that's the other thing your numbers show is just the dearth of supply across what you cover.
Yeah, and throughout this tightening period, as interest rates have been going up, we've been saying let's not lose track of the fact that supply is still really, really low, and just as sales are down by over 40% year over year, so too are listings. So we're not seeing this sort of glut of inventory coming into the market where there's a ton of choice out there, and so the concern is that as we start to see people move back into the market off the sidelines, in addition to the fact that we're expecting to see record population growth, we're going to see tightening market conditions in the second half of this year. And even more importantly, as we move into 2024, we really need to get a handle on the supply issue.
What I also found interesting too was the number of listings under $1 million and how that's coming down too, right? It used to be like 1.2, 1.3 was kind of an average range. Now that's coming down into the sort of high 900s. That's kind of a significant change to the market too.
Yeah, it's an interesting statistic where we're seeing a lot more sales at the lower end of the price range. And I think that speaks to a couple things. Number one, overall prices have come down to mitigate the impact of higher borrowing costs. But number two, we're seeing and expecting to see even more so first-time buying activity. And some of that's driven by the fact that the rental market's so tight. We've been seeing double-digit increases in rents over the last year, and so there's a lot more households today that are saying, well, I'm looking at the cost of renting versus the cost of home ownership, and I'm starting to take a harder look at home ownership, even with higher borrowing costs.
Yeah, those rents have really soared. There's no doubt about that. Of course, coming up, Jason, next week, the Bank of Canada making its next rate announcement. We don't know what that's going to be. They've sort of indicated perhaps that they'll be sort of hanging firm. What do you think could that change? It won't change March's numbers again, but how much are you looking at that as a sort of key moment in the sort of industry?
I think it certainly will be important. I mean, a lot of people have been keying in on the strong jobs number that we saw at the beginning of the month, but it's important to note that since then we've seen, that inflation numbers have continued to trend downwards, which is what we want to see, and that's the goal of higher borrowing costs. And also, the GDP numbers suggest that the economy is kind of stalling, and maybe we're headed towards that, slight dip in economic growth that a lot of people have been forecasting. So I think that the bank is going to weigh all those things, and I think you're right. In all likelihood, they're going to stay pat.
Yeah, it's going to be really interesting to watch. It's always interesting to see these numbers. Jason, we appreciate you coming in, and thanks for sticking around a little overtime today.
No
Thanks
problem.
For this.
Thank you.
Okay, appreciate this.